Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. There are still four main levels of congestion in this market. There is a narrow band, 267 to 269.5. Another narrow band based around the 260 area. A wider band between 250.5 and 255.75 that contains within it the 2013 high at 253.5 and a 50% Fibonacci line of the whole of the 2021 move at 251.75. And finally, there is a wide band, quite diaphanous, between 237.5 and 247.25, within which we have the congestion from late August to early September 2021. As a note, the diaphanous band predates the August to September band. Now, unlike some of the other grain markets, we really only have the one head and shoulders pattern here, dating from late October to early December 2021. And I reckon I can call this one a topping pattern, as though we've had pullbacks, the overall activity since the break below the neckline, which is currently at 279 even, has been bearish. Thus, we have a preliminary target X in the 255.5 area. We've so far come close to target X, but we've not reached it yet. However, the real thing I wanted to talk about is the two bearish patterns that have been constructed more or less since the making of the head and shoulders top. There were originally three, but one has become redundant and is now retired. The remaining ones are: number one, the bearish shift pitchfork for the end of November to late December 2021 move, and number two, the late December 2021 to late January bearish Andrews pitchfork. For my ease of pronunciation, I will refer to these by their number. So bearish shift pitchfork 1, the shallow angle bearish shift pitchfork, is still in operation, though it has been breached, though not broken. Interestingly, on both the downside and the upside. It has been breached but not broken, which is why it is still here. Then there is the new bearish Andrews pitchfork, number 2. This one is clean of breaches or breaks, but is still a young one, and thus should be treated with caution. Meanwhile, this past week, the market has been having difficulties trying to push up through the overhead congestion, 267 even to 269.5. And has also decided not to try down to the congestion around 260 even. This failure to try lower puts both these pitchforks now at risk as well. However, there is an alternative pattern, potentially waiting in the wings. I've not marked it on the daily chart as it would further confuse an already confusing chart. But we have a possible late December to date descending triangle pattern. I'll keep this in mind, especially if yet another pitchfork is forced to retire. London UK feed wheat. So, I'm still using a line chart for most of the action here. That's okay. It sometimes helps with the patterns. Anyway, we do not have any head and shoulders top patterns here. Instead, we have three pitchforks, two bullish and one bearish, that are fighting for the soul of this market. The two bullish pitchforks originate from the same early September 2021 to mid-January 2022 action. They are a bullish Andrews and a bullish shift pitchfork. I will concentrate on the bullish Andrews pitchfork here as, for one, the bullish shift pitchfork has not as yet been tested, and two, the bullish Andrews has been tested, breached, even in some view broken, but has still held up the market. The key is the lower time, currently at 218.05. This has been where it has been breached, possibly seen as broken, as we had two consecutive closes below the lower time. However, I'm not willing as yet to call it so, as the rising medium moving average, currently 215.05, has underpinned the time as support, and we're ending this week up towards the now higher moving lower time. These two supports, the lower time and the medium moving average, are key to the survivability of this pitchfork, if it is to survive at all. It would not be unusual to see them tested yet again, maybe even broken yet again. Alternatively, it would not be unusual to see the market use them as a springboard higher up to resistance seen from the short medium moving average, currently at 219.75, plus one other resistance, a new dynamic one that I'll detail shortly, Then we have the November 2021 to January 2022 50% Fibonacci line at 222.60, and the big, thick congestion band in the 227.30 area, which contains the 2012 high within it. Now, I've also drawn, pressing down on this lower time and the medium moving average, a new mid-November 2021 to late January 2022 bearish Andrews pitchfork. This is the first bearish pitchfork I've drawn here on this chart in a while. This is as yet untested, but a little above the market we have the upper time, currently at 218.90. This is the new dynamic resistance that I alluded to earlier. Conversely, below we have the middle time, a support, currently at 207 even, which is gradually moving lower all the time. These are the forces that are at play here, and they may well turn out to be substantial, as it seems the downside has some interesting supports and the top side some competent resistances. This has prompted one other thought. What if the January action is a diamond pattern of sorts, or the December 2021 today action is a possible reverse head and shoulders pattern in construction? I'll think on these a little more and maybe speak about them next time. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.